Guys, the appraised value versus sales price. Let's talk what that means to you. The appraised value can absolutely impact your LTV, your loan to value. So you take your loan amount and you divide it by the value. What is the value? On a purchase, it's the lesser of the sales price or the appraised value. So if a home is contracted at $400,000 to be sold, but the appraisal comes in at $390,000, the value in this instance is $390,000. For refinances, the value is the value based on the appraisal. It's plain and simple. So guys, what do you need to know? Well guys, if it comes in lower on a purchase, there's three options. You can go back to the seller and they can lower it to meet the sales price. They can say no way, no how, and you guys can maybe meet in the middle. What happens is up to you and up to the negotiations. So if they decide to lower it to meet the value, that's great. You end up coming with a few bucks less to closing and you bought the same house for a lesser price. Awesome. If they decide no, or you got to meet them in the middle somewhere, you guys, to keep the same loan to value, you're gonna have to pay the difference in cash. So in my example of $400 versus $395, you have to pay $5,000 out of pocket if the seller's not gonna budge and stays at that $395. And you got to buy it at $400, $5,000 out of pocket to you before any monies are counted towards a down payment. So if you're putting 5% down, you put 5% at $395 plus another $5,000. So it's a big deal. You need to plan for that if you think there's going to be appraisal issues. On refinances, again, loan to value could mean everything in terms of whether or not a refi makes sense or not, whether you're even approved or not. There's other videos you guys should check out. Mainly the big ones are, how do they use comps and find these values, and let us know if you have any questions. We're here to help.